1 hour looks interesting. This pullback on the 1 hour looks pretty interesting. What is it? 30 seconds. Let's see what gold does in 30 seconds. The 1 hour looks pretty interesting right now. Pump or dump, pump or dump. Type in the chat, type in the chat. It looks bullish on the 1 hour. The 1 hour doesn't look bad right now. Does it dump down? This would look like a good setup on the 1 hour chart. Crypto might move. It's 2 p.m. Pump or dump. Some people saying pump. On the 1 hour, price looks how it looks. 1 hour just closed bullish. We've had a nice pullback for the last couple of hours. We're gonna watch price for a bit, see what the market does. 2:30 is when Powell speaks, so that's probably when even more volatility is gonna come in. Just watch it, it's dumping now. Oof. Dump. We were wrong. Pump and dump. Dump and pump. Just keeping an eye on it for a bit. I'll tell you when to come if there's anything. Yeah. Just keeping an eye on price. Nothing exciting right now. Nothing exciting. Nothing exciting at the moment. I mean, it's FOMC day. It's 2 minutes past. The 1 hour is just bouncing around right now on gold. We just made a strong move down and wicked right back up. So maybe a little bit of a fake out there, down. And now the 1 hour is completely flipping. Wow. That just happened. Back above 4,000. There's like two phases to FOMC. Like right now, the market's moving. Let's check it out. There you go. 25 basis points as expected. Did we hit 75 there? It's hard to say what price will do exactly, because last FOMC was pretty crazy. It's only 203. Yeah, we just swept those lows, like went straight down, back up. We just swept those lows quickly. To end the week, I'm more bullish on gold to end the week. Like, we didn't get any crazy impact there, like super crazy. But in 20 minutes, the market could move again. 3 hours left till the day finishes. So it's like the market was expecting this. So, I mean, let's see how some other things moved. Bitcoin coming down. Ethereum chilling at 4K. So like stocks sold off. Might have expected like higher impact there, right? So the market was expecting like those rate cuts. If you look at the last two FOMC events, they both like went down for gold. So what was it, July 30th and September 17th. So last FOMC was here on the 17th and then also on the 30th. Or it would have been on the 30th, right? July 30th, no? Yeah, July 30th. Here. The last two FOMCs, like gold was dropping, and gold dropped on the second last one, like July 30th. And then end of the week, like Thursday going into Friday, was more of like the buys. Same with September 17th. So you don't have to rush things right now, because like if you look, last FOMC price had a huge wick up and then dropped down, went up, didn't end up turning around until like Thursday going into Friday. Last two times gold went down, but there was eventually like a buy setup. The following week went up pretty much, like it traded up Thursday into the next week, Thursday, Friday into Monday, the last two FOMCs. You don't have to rush things now. Like I don't know, we probably won't, I don't think we'll miss anything now, but the setup, if we're looking for like a good buy, it might be tomorrow morning, tonight or tomorrow. So I was looking at the last two FOMCs. Price dropped a bit before one of them, and then during FOMC it went down. It was July 30th, right? Yeah, July 30th. This candle. Price ended up reversing after that. Ended by the next week, like by the time the market closed, it was like up here. Same with last FOMC, like price pushed down more. The start of the next week, price was higher. So maybe like Thursday, Friday, still setting up 4 hour. We still have time even Thursday, Friday, because look how much time like the market spent after the last FOMC. Like this was the FOMC candle on the last FOMC. This one. That was it. Price spiked up. It was basically like a trap, fake move, fake out. Thursday morning, New York session is like here, 9:30. Like so this is FOMC. The next morning's here. So like you can see price moved a lot up and down, but towards the end of the week, like finishing the week off, was where it really made that movement up. I'm thinking probably the same thing is gonna happen this week. Or like Thursday going into the end of the week starts to push back up. So a little bit more about like maybe trying to time it this week for tomorrow. Right now the 1 hour looks not bad. Like if you're looking at the 1 hour chart, it doesn't look bad when you do some technical analysis here on the hourly, even the 4 hour. But I feel like regardless if there's a setup here tomorrow, I feel like there'll be a setup tomorrow morning. going into the end of the week. Yeah, regardless, the 1 hour does look pretty clean here with structure. Like we have this low here, high. Holding this area, like still just holding, maybe waiting for Powell to speak till actual real volatility comes in. Not a lot happened there. On technical approach, yeah, this doesn't look bad on the 1 hour here. It's actually been trending pretty clean on the 1 hour. There's a lot of volatility in these movements, a lot of like pips that are being moved. But on the 1 hour, it looks pretty clean. Still, what is it, 210? This would be my type of setup too. Like I keep looking at this because for me, like this is kind of like my type of, you know, this is kind of like my type of way of doing technical analysis. Is looking at stuff like this, something that could maybe push up back to the highs or take out the highs. That's what I see right now, like when we look at the 1 hour. But keep in mind, like it could be a timing thing for tomorrow. There's a lot of time for between now and tomorrow morning, and I was looking at the last two FOMCs, and pretty much like the next morning, regardless of what happened on FOMC, like it went down and then it went up. The next morning would have been like, or the next day, Thursday, would have been goodbyes to end the week off. So still like no rush really. But the prices still could go down. It showed us that the last two FOMCs, price did go down. Bounced, went down, bounced, went down. It wasn't until pretty much Thursday, New York session. So the next morning, tomorrow morning, basically, New York, to where it's like, it started to go up right again. That's what I was looking at and considering. It was like more trying to see where it is tomorrow, leaning into timing, using time as like a strategy. Because like if we repeat, then there's probably buys tomorrow going into end of the week. Let me check the chat. Bitcoin. What's crypto doing? Yeah, not the. Looks like volatility is gonna come in closer to when Powell speaks. Like, it's not the craziest move I've seen. We had a spike up on gold, similar to last time. Like last time, it spiked up in the beginning and down. Like if you go look at September 17th, where is that? Like gold quickly spiked down and then it went up. It was a fake out. Completely dropped. The last FOMC spiked up, went down. This one had a spike both ways. It spiked up, and now it's coming right back down. Yeah, dollar's looking strong, so gold might. It's hard to say right now. Powell's gonna speak in 15. So once he speaks, that'll shake the market up again. Gold's just kind of bouncing up and down. Looks similar to like what it did last FOMC. How it spiked up. Now it's dropping down. Would I open a trade? Like at this time, I mean that's entirely up to you and your risk management plan. Like it doesn't have to be like, yo, let's trade. Because like you might look at the market afterwards and be like, there wasn't really a setup sometimes, right? So most traders get excited about FOMC. It's like FOMC, but after you traded for a while, it's just like kind of like a day that's in the way, some noise. Because like everyone wonders, what's the market gonna do? What's the market gonna do? What's the market gonna do? And there's just so many things the market could do on an event. Like we just seen what price is doing. I've seen days where price moves way more than what it just did. Like, but even with that being said, you just have regular days, especially in the year of 2025. There's just regular days now that provide volatility. That a news event isn't so much needed for volatility in the year of 2025. Like, there's already like enough volatility with things going on in the world. Trump tweets, literally like the Trump tweets, the news every day, the headlines. So in 2025, 2026, like it's not going to take a news event to move the market. The market has volatility. Like I remember when I first started trading like NFP, like I remember when like 10, 11 years ago when I first started trading, NFP would always move like crazy. Now NFP doesn't even like excite me that much anymore. There's days where it moves, there's days sometimes where it doesn't do as much, but with Trump tweets, yeah, literally that alone, with the Donald Trump tweets, I think that's like enough of like a news event for frequent. It's like literally a news event itself when Trump tweets or when he's talking, and he's frequent. That's the thing. He's quite consistent and vocal. He's very vocal, very verbal, and frequent with that being said. So Trump tweets, Trump speeches, that itself is like high impact red folder news events. Yeah, 4 hours still dropping. $39.50, maybe. The best setup could literally come like tonight, tomorrow, too. Like that's what I was just like all I was studying today was like what the last FOMC did, and it was like pretty much like a fake out manipulation move before dumping. Like price literally looked like it was breaking all-time high and then completely went the other way. And then there was a bounce like at I think like 230, 245, there was a bounce. And then still price kept dropping. I haven't been as actively trading this week or sending any signals, streaming as much. Just because it's FOMC week. I never really like FOMC week. So I'm thinking New York tomorrow or London. That was London session right there. I'm thinking New York tomorrow is where like probably the entry is that we're looking for to end the week off. Last three. I didn't look at June 18th. Where was price? Oh yeah, that was an annoying week. I remember, June 18th. That was such an annoying week. Yeah, June 18th, FOMC. They went down. Friday had a reversal. That FOMC, that was like one of the worst like weeks I think. I was trying to buy gold all week. Like here, I remember that week I was literally just looking for buys on gold and it just wasn't moving. The last two triggered a buy. Yeah, the last two events like triggered a buy at the end of the week though. Not today necessarily. Like not today. Like more like tomorrow, going into Friday. I don't know. I got a feeling that's gonna happen this week. I feel like it could. I feel like that's a possibility. That makes sense too with timing. Maybe let's see. Powell's gonna speak in 10 minutes. That's when the real, I think, movement's gonna come in. Like more like higher impact. Like even Bitcoin. What did Bitcoin just do? Dropped a bit, not too much. I wouldn't say a huge move. Moved like $1,000. Ethereum. And like 10, 15 minutes from now, next 15, 20 minutes is when like the real volatility may start to kick in. If it was an FOMC, it would be a calm afternoon right now, 2 p.m. And we would be looking at gold like, yo, you look pretty sexy right now. Broke these highs here to the left. We had these highs here that we formed. So we do have some nice structure. If it was just a regular afternoon, London session's finished, coming towards like the end of the day in a couple of hours, we'd probably looking at gold more like, yo, we think this is going to go up. So maybe like, let's see how the next 15, 20 minutes go. Maybe it's calm and price doesn't do anything too crazy. And this can still kind of like stay how it is going into tonight, the next day. Maybe. Because if this is just a calm little Wednesday afternoon, no FOMC, we'd probably be looking a little bit more bullish. Like we'd be a bit more from we took at these highs, yeah. Let's have some lower levels. 39.50 looks nice. Trump meeting with President of China tonight. Yeah, that too. S&P 500. There's the S&P 500 earnings on Friday. Trump has meeting tonight with President of China, 10 p.m. There you go. That's going to be a time where the market moves. See, Fed cuts rate by 25 basis points, second rate cut of 2025. The Senate in favor of a 50 so one of the Fed members is in favor of a 50 basis point cut. This one said in no favor of rate cut. Fed says it will stop shrinking its balance sheet on December 1st. Fed says inflation has moved up and remains somewhat elevated. Fed says downside risks to employment. Downside risks to employment have risen. The Fed is in full swing. So Justin, Federal Reserve announces it will stop shrinking its balance sheet on December 1st. So that ends the QT, the quantitative easing. Basically them like a vacuum to the market, like them, the removal of liquidity. December 1st. Powell is about to speak about that stuff. That's all Twitter's talking about. Jerome Powell. Like literally every post. Jerome Powell. Gold's dropping. Looks like it's going to come down maybe a bit to this zone. Tonight will be an interesting night. I'll probably end up streaming tonight again just to see where the market's at. And there's an important meeting tonight. So it's pretty much like last event spiked up and went down. It's doing pretty much like similar movement to like what it did last time, just not as like last one was pretty crazy, like how fast it went. Ended up reversing at the hour, so like last time price just dropped down and it reversed at the hour. So when pretty much like when Jerome Powell was done speaking. So it's like spiked up, went down, reversed at the hour, like when the hour was finished. It's 14, like this candle is when the rate cuts come out. So it goes down for an hour. This could potentially go down for the next hour then. Maybe until like 3 p.m. So, well, the next half an hour. Because it's already started dropping since pretty much like 14. So since 2 p.m. it's already started dropping. So it could probably continue down a bit more for the next half an hour. But then potentially reverse. Probably get a bounce at least. Like once Powell starts speaking and a bit after he speaks, you'll probably get like a bounce like last time. Last time the market was dropping for the first like 15, 20, 30 minutes, even when he was speaking. But once the hour finished, there was a bounce, like a reversal. Like I said, there's no rush. Just want to come on live, see what gold was doing. I think I'm not calling anything out, just doing some analysis right now. Yeah, we talked about that this morning. Bitcoin pretty much like almost drops. Like the last 4 FOMCs, Bitcoin's dropped for a bit and then reversed up after. So 7%, 6%, 8%. Maybe following the same pattern this one as well with Bitcoin. Same pattern could be pretty much being followed with Bitcoin here. Yeah, we got H-bar ETFs. That happened. There's more out there that are being filed. So one got approved. The Canary one got approved. There's some other ones out there that are have been filed. But one got approved. Yeah, I noticed someone said that in chat. We talked about this earlier today. Today marks history. Well, this was yesterday. Started like the NASDAQ officially posted it on October 27th. So the pump for that kind of there was a pump for that. Like it had like a pretty good like 24 hours. They got posted on the 27th. Between 27 and 28, it had a pretty good pump. Like that news was literally on, you can see here, this was the NASDAQ posted about it. NASDAQ regulation, Canary Capital Group anticipated to begin trading on NASDAQ. And this is all about H-bar. Where is it? There it is. The trust will hold H-bar and establish its net asset value by referencing the price of H-bar in US dollars, measured by CoinDesk. Pretty cool. H-bar. That's marks history because it's the third ever crypto ETF to launch after Bitcoin and Ethereum. Some good news for that. I've always liked that coin. I've always talked about it, so go where the news like that is staying positive. Good coin. I hold that coin. Maybe a good signal to add more type of thing. That's what my brain thinks. with that being said. That's strong news for HBAR because not every crypto has an ETF, so that is that's some strong news for HBAR. Yeah, gold's dropping first 30 minutes. Maybe after the hour you get a reversal, like a bounce, and I'm liking like I said, I like what the 4 hour. Like if I break down gold real quick, what I see personally. Like, yeah, I know some people were saying, I was saying 39.50 earlier too, like 39.50, 39.70 area. Like, we did have a nice shift up. I'm wondering if this was a nice market structure shift, like here with this high. Looks pretty clean, like when we break it down from even like a 4 hour. If the 1 hour can hold this area. Maybe there's a setup later. It's almost like a break and retest. Time is it? Oh man, I'm about to pull it up. It's here on my monitor. Oh man, speaking.
I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year.
He's going to dump our bags.
Prior to the shutdown show that growth in economic activity may be on a somewhat firmer trajectory than expected, primarily reflecting stronger consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity. While it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 0.25 percentage point to 3.75% to 4%.
Market ain't
Higher
even
tariffs
moving.
are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived,
Same.
a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time
This guy
increase
has
in the
a
price level
checklist
does not
spreadsheet.
become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside.
What's he
A
saying?
challenging situation.
Bro, what's he even
There
saying?
is no risk-free path for policy as we navigate this tension
No
between
risk-free
our
path.
employment and inflation goals. Our framework calls for us to
Try to
take a
do
balanced
technical
approach in
analysis.
promoting both sides.
Let's try to do technical analysis and trade hold numbers
Downside
and
risks to
reversals.
employment having increased in recent months, the balance of risks has shifted.
Gold's
Accordingly, we
dumping
judged it
now.
appropriate at this
These
meeting
guys
to take another
all-
step toward a
market
more
didn't like
neutral
that.
policy stance.
Market
With
didn't
today's
like that.
decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to
Sounds like
determine the
the same
appropriate
thing.
stance of monetary policy based on the incoming data, the evolving outlook,
Well, there she blows.
and the balance of risks. We continue to face two-sided
There
risks.
she blows.
In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December.
I was speaking.
A further reduction in the policy
Market-
rate at the
this
December
chat's
meeting
crazy in here.
is not a foregone conclusion. Far from it. Policy is not on a preset course. At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings as of December 1.
Powell,
long
That's because
Bingo,
he said
yo.
the next rate
Yeah.
cut isn't a foregone conclusion.
Reserves are somewhat above the level we judge consistent with ample reserve conditions.
Well,
Signs have clearly emerged that we have reached that standard.
wrecked.
In money markets, repo rates have moved up relative to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our
This guy's got like
standard
a
repo
bingo
facility.
checklist.
In addition, the effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see
39.50.
as the size of our balance sheet declined and warrant today's decision to cease runoff.
39.50 tapped.
That we've been shrinking our
It's doing the same thing it did last time.
holdings have declined by
Pretty much from the looks of it.
As a
Pumped
share of
up
GDP,
first.
Our balance sheet has fallen from 35%
A little
to
bit.
21%.
Well, last time it pumped up like a lot,
Phase of our
but dropped like literally the first like
our balance sheet steady for
30 to 45 minutes, reversed at the hour. There might be like a pump back up, like a bounce back up. It hit. Did it hit 50? I think it hit 50 almost.
we will continue to allow
Almost at
agency
39.50.
securities to run off our balance sheet and will reinvest the proceeds from those securities,
Well, if you're playing this setup on gold,
furthering progress toward a
don't.
portfolio
You know, with news, I would trade it smaller if you're trading like this setup with gold.
strategy will also help move the weight
So I think the next set. I don't think the next setup will be till like tomorrow morning if this doesn't hold like this area,
Treasury securities. Thus,
like this area on gold. If this doesn't hold, then probably not till tomorrow is gonna be like the next setup.
been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and
Everything's
businesses
dumping.
across the country. Everything we do is in
Everything's
service to our
just
public
dumping.
mission.
There we go, Powell.
We at the Fed will do everything we
This
can.
is why
to
we
achieve
gotta.
our
Everyone's
maximum
excited for when
employment and
Powell
price stability
speaks. We
goals.
love when Powell. They know
Thank you.
Powell
I look forward to
FOMC, but he
your
just
questions.
dumps the market. I swear. Bitcoin's dumping 110. He's about to get asked some questions now in interviews.
The Wall Street Journal. Are you uncomfortable with how market
go,
pricing
H bar.
has assumed a rate cut is a foregone conclusion at your next meeting?
Well,
Dog
as I
had
just
a
mentioned,
little Why is
a further
gold-
reduction
why
in
is
the
gold
policy rate
dumping?
at
Everything,
December
everything's
is not
dumping.
a foregone conclusion, as I've just said.
Gold should
So,
be just
I would say
pumping.
that needs to be taken on board. We had
Silver, yeah,
you know,
everything's
just say
dumping.
this, 19 participants on the committee. Everyone works very hard at this. and
whatever he
takes their
said there,
obligations to
like
serve
the
the
last
American
bit there,
people
market
seriously.
didn't. Market said,
And at a time
"What the
when we
fuck?"
have tension
Someone said, "Damn, the market's too sensitive." From what Powell says,
you know, strong views across the
our
country.
portfolios freaking dictate what this man says.
And the takeaway from that is
No guaranteed rate cut. Market needs to chill. After this meeting, I'll be buying. Screw this guy. Hawk Tua.
This is him hawking because he's kind of bullish the economy. It's just a weird balance.
Some of your colleagues have framed
DXY is
last month,
pumping.
and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude
Someone said, but he's wearing a
that
purple
you've
tie.
taken
That
out
shouldn't
enough
happen.
insurance? Are you looking for some kind of improvement
China
in the
deal is a
outlook?
bigger catalyst.
Or could this unfold along the lines of last year, where you made a sequence of adjustments and waited to
Damn,
gather more
Jerome.
information?
Jerome really fucking
The way we
fucking gold up.
have been thinking
Everything's
about it,
dumping. Dollar's just shooting up like crazy right now.
the risks to the two goals for a very
Yeah, so like now FOMC is like this. It's like the first 30
and
minutes
then that has changed now. And
been
as
like
we
how it
see,
is, and then market doesn't do anything, and then when he speaks, it's like bam.
Downward revisions in job creation, we saw very different
39.50's
labor
tap.
market and suggested that there were higher downside risks to the labor market than we had thought.
Looks
And
like
that
we're rolling
suggested that
down, folks.
policy, which we had been holding at a, I would say modestly, other people would say moderately
Wrecked.
restricted level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk.
If you're trading this setup, then just keep it light. Keep it light if you're trading this setup. You could maybe get some bounces in 15, 20 minutes
So in that
around
sense,
this area,
there's a
but
risk management.
if this area doesn't hold, then we maybe come down a low, look at gold tomorrow, see where gold's at tomorrow morning,
Is a different thing.
try to make it back. Fucking Powell, man.
Claire Jones, Financial Times.
Just gonna sell now
thank you
every
for
time
taking
Powell
this
speaks.
question. You know, we've just heard from you that
Yeah, Ethereum just got cooked.
the discussion in
3800s.
December and the conclusion of the discussion
Bitcoin
is not
cooked.
on conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought up. Was there any
I need to go vomit.
sort of the investment?
This guy said I need to go
in AI
vomit.
and some of the generation of household wealth through rises in stock prices related to the AI boom. Thank you.
You know, I wouldn't say that's a
Sell
factor
crypto,
in
buy
everyone's
Google.
assessment of the economy. I wouldn't say
What's
it's
Google?
the
What are
driving
stocks
factor.
doing? Google has their
I think for anybody.
Google. Oh yeah, everything's
I
dropping
guess I
right
would
now.
say it this way. Once again, I would
Stocks.
just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment.
Bro,
You
Powell
have one
speaks,
tool,
volatility
you can't do
comes
both
in.
of those. You can't address both of those at once. You've got
Bro,
to make differences.
man has
So
done this.
you have
Yeah.
some people have different
Classaroo just took out the high, made a new all-time high today, and dumps.
forecast faster or slower progress on one or the other. And they also have different levels of risk aversion. And you know, people
You gotta wait for the dip to settle down on gold. Gold looks like it's gonna probably just keep dropping. Like, you gotta wait for this to settle down.
underruns of
Tomorrow, tonight, like Thursday's candle. Like I said, like if you look at the last two when I got on, that's why I did that whole little
discussion that goes on
spiel
between
about
the,
last event.
yeah, more participants go out and talk. They're very
There's still
different
time. Like
and
last
they were reflected in
last
some
event,
of
gold
the
dumped,
today's
and then it dumped the rest of like it bounced up and it dropped the rest of the day until the next morning.
you know,
So like
we haven't made a decision.
you gotta let this dip either cool down
I always say that.
to like London session or tomorrow morning New York session.
Here is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT?
Because if this area doesn't hold, if we don't rebound back here, then we'll probably just keep like trading how it did like last time. Maybe have some bounces go up.
Yeah, that could be one of the factors.
There's still a lot of time. Like you'd have to let this like dip simmer down until like tomorrow morning. I think that would be when the next setup is, because maybe 39.50 holds. It could have some like bounces off of it,
A framework for looking at, you know,
but it is a tight environment. It's a tight environment there, folks. All right,
time now is that when we
tight environment
feel like
here,
we're a little bit or a bit above
and a fast one
what
too.
we'll consider a level that's ample, that we would
Buy the
free
dips,
aside
maybe.
balance sheet.
We're still like in the area, so maybe it's buy the dips. Trade it light if you're gonna trade this like type of setup in this area.
So this happened, some of it.
If you're
some things
trading,
have been
keep it
happening
light.
for some time
Don't get
now,
too
showing
crazy.
Gradual tightening in money market conditions, really in the last.
It's at 39.50 now.
or so. You've seen
Still
more
a little bit
significant
above it,
tightening, and I think
but
a
market's
clear
moving fat. Now
sense
markets are
that-
moving.
That we're at that place. The other thing is, you know,
I think for 2026, my plan is like the last couple FOMCs. Like for me, there's been like no point of even trying to trade it.
And so there's not a lot of.
My plan 2026 is literally just FOMC day. I'm just gonna like
Get the last few dollars because,
get
you know,
get a massage or something.
Again, with the
Like,
balance sheets,
it's gonna be a day where I just like
shrink as non-reserve.
don't even worry about the charts.
You know, there was support.
It's like with the amount of time I'm on the charts, the amount of times I already stream, it's like
effective
It's like
December 1.
FOMC day, another day.
Balance sheet. And the December 1 day
39.50.
gives the markets a little.
That's a tight one. It's a tight level, folks. It's a tight area. It's a tight room for margin there. 39.50 area. I dropped the chat and I mean not the chat, the chart in the Discord chat.
2% target seems to be, that there are these mounting downside risks.
Maybe we hold the 39.50 still. Little bounce off of it, but what time is it? 45?
Around current employment levels or even starts to strengthen
Like
somewhat. How would that
15, 3 o'clock. You might get like again. Like I said already, I ran it down a few times, like a bounce, like last time here.
Yeah, I mean, in
It
principle,
really started bouncing. Last time it was dropping this entire time, and then it bounced at literally 45 to like 3. Like it literally bounced at like 245 to 3 last time. So you might be getting like that similar bounce as like last time.
which are sending a sort of
If you look at last time,
more of the same.
1445.
Job openings.
See when that bounced.
And we'll get lots of survey data. We'll get the beige book and things like that. So we'll have a picture of what's going on in the labor market.
So like you're getting like that, maybe like
We're not seeing
phase 2 bounce C45, kind of after he's done speaking and he got his questions answered now. Might get a bounce like that.
But nothing more than
Look what price did last time. Last time, it literally dumped how he dumped now. Dumped a lot last time. Doing the same thing pretty much.
To assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the
Yeah, 2026, my plan, I'm not even going to worry. FOMC, when you guys ask me what FOMC is doing in 2026, I'm going to be like, I don't know, I don't care. That's my plan in 2026. Because like, I get on the charts enough. I predict enough things. I don't need to like predict FOMC. It's not usually. I like just regular days. 2026, that's my plan. When you guys ask me about like what I think about FOMC.
Significant or material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect.
I'll look at the market tonight, but like I said, I've said it a few times already. I feel like tomorrow morning, so I might say it 2 more times. Tomorrow morning, New York is probably where that setup's going to be. Might not work here today or for tonight. Like I said, tomorrow or even maybe London, but before New York is probably where we're going to see that setup. Thursday going into Friday. Because if this doesn't hold, I don't see another setup really here. If like this area doesn't hold, then it's like don't really see
I was referring to the discussion
another
about,
setup here.
to the extent it related to December. You saw we had 2 dissents, one for 50 and one for no cut. So that was a strong, solid vote in favor of this cut.
Don't really see another area where it could bounce off or have rejection. Even like scalp, like it tapped 39.50 and went up like a little move there.
What does that look like? And I think people are
Little
saying,
bounces, scalps.
They're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth.
This thing is
forecasts for
still pretty steep at the moment. Yeah, Powell's gonna like still speaking.
a labor market that's kind of. I don't wanna
Usually
say
speaks
stable,
to like
it's-
the hour's
it's,
done, 45,
it's
the
not
hour.
clearly in motion. It's not clearly declining quickly. In any
This
case,
guy
it
always
may be
says we
just
don't know
continuing
about
to
next
run
month.
pool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches.
What's up with this man
you know,
Powell,
there are
man?
Differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance sheet,
Yo, this
if
chat's
you stop
crazy.
at the runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right.
So as you can see, if you look at this chat on another stream, you guys are not alone. like there's people out there suffering, as you can see in this chat over here. Holy. So it's not a good day for a lot of people.
The size of the balance sheet, the non-reserve liabilities, currency, for example.
Say like New York tomorrow, New York, tomorrow morning, New York session. Like I said, go look at the last 2 FOMCs, kind of gauge like where, like look at time, get a sense of like, okay, where the week finished off. You know, the day that the buys came in, we're probably gonna see like a similar thing tomorrow morning, maybe like sometime tomorrow morning. I don't know the exact hour, but during the morning session, right, for New York session. I don't know the exact minute or hour, but you know, like we can get a sense of like around the area or around the time of the day where the market might make a certain move or be setting up, or where we can at least position ourselves, right? So like if you look at the last two FOMCs, it's not like the day you would have missed out on a crazy swing that came towards the end of the week. So it's thinking like, okay, look at where like the week finished off. Like that week finished off here. Well, here. So that's where that week finished. So it's like FOMC was here. Thursday morning was like right here, New York session. So it's like we have time probably for this to set up for New York session tomorrow. If anything, keep an eye on it, kind of keep that in mind. So whatever happens between now and tomorrow, New York, there still could be time for price to set up. Like look at what last time it did. It went up, it went down, it went up, it went down, but really finished the week strong. Like it finished the week, like could have been buying at the end of the week, maybe Thursday, Friday. Thinking more into like, okay, Thursday, maybe Friday as well. It doesn't even have to be tomorrow morning because we still have Friday. It could be maybe Thursday or Friday. We don't have F&P. Do we have NFP this Friday? Tell me we don't. Is it? No. When's NFP? Was there even an NFP this month? Are we getting NFP November? Yeah, here. That was the forecast. Even like Friday, like look at like Thursday, Friday reversal, last FOMC event, end of the week. So other than like what I see on the chart here, I'm thinking like Thursday, Friday reversals for New York session. Like that's the way I'm thinking for this week. Thursday, Friday potential reversals. Other than this like 39.50 area, which I think we can all see, because I even saw some of you guys saying in the chat how on the 1 hour it looks clean, and I think I saw someone in Discord write it too. I think we all see something similar. Well, maybe a good amount of us. Something similar we could probably all kind of see here for gold. If this doesn't stick, then we gotta like lean more towards like the next two trading days: Thursday, New York; Friday, New York, or even London session. I'm probably gonna be back on tonight either way, and tomorrow morning. But I didn't look at the market this morning. Didn't look at the market too much this week. Waiting till staying patient. Can't control the market. Just gotta stay consistent. One setup at a time. Anything else to see on gold? No, not really. Like 4 hours still bearish at the moment. Anything else? Like the daily was nice and strong today. We've pretty much like retraced the whole day. Like it was super bullish beginning of the day. Now fully pretty much like retracing. The days come right back down a lot. Holy. Use New York session for like Thursday. Maybe use like you could use New York session. You don't have to worry. Like I said, there's no rush. There's no rush. Remember I said when I got on, there's no rush to looking for an FOMC trade. We missed sells obviously, but if we're looking for those buys, like there's no rush. If you're looking for the buys, like they could be tonight, tomorrow morning, like that. I like to use times. Like so, what I mean by times is sessions. New York session, London session, or Tokyo session. I like to go to the charts those 3 times, or sometimes two or three times. Like I might go to the charts in London and New York, or Tokyo and London, and just see what the chart's doing. See if there's anything. I like to usually use time as sort of a strategy. So it could be New York tomorrow. It could be New York Friday. New York today, like pretty much just reversed. It was like London bullish, New York bearish. Bears taking L's. The Bears are in the market, man. Silver. Still looks like it come down. Yeah, like it's 3, like about to be 3. So like last time he spoke, like literally around like 45. This time, like 45, the last 15 minutes. If you go look at last time he spoke, 45 minutes after he spoke, about 45 minutes after he spoke, gold had a rebound. Nice little rebound, you know, reversal. So same with this time, like 45 to like 50 minutes after he spoke, you could see here's the 35, 40, 45 minutes. You could see like, so we have like spike up, kind of like initial movement. There's like usually not usually, but it's something you'll see. Like the last 2 it did it, where around like closer to the hour. I don't know if you guys heard me saying like throughout this stream, like closer to the hour it'll probably reverse. Closer to the hour it'll probably reverse. I said that maybe like a few good amount of times, if you guys remember. Maybe around the 45 minute to an hour. That's what I was talking about, kind of like similar to that. Could have stayed down and maybe a bit lower, but 1 minute shifting. Like usually after he's speaking a bit and he starts getting asked questions, I call it like a rebound, like a bounce, like price rebounds, bounces quickly, kind of like what it's doing right now in like the 30 and 15. You're getting like a quick little rebound, quick bounce in price. That's common to see. Again, it happened last time too. Yeah, gold went down like crazy. Holy, like the MT5 price is moving like crazy on gold. You know, like maybe price holds. Like the 39.50 got tapped, but you would need a strong close. You would need like a strong, fast close. It did come down to 39.50. Does it hold? Maybe. 4 hour. 4 hour came down to an area. Like my eyes see like this area, like I said when I got on. 1 hour. Damn, that 39.50 held. Makes sense. It's like 3 o'clock, like an hour after FOMC. Like the timing like makes sense for like buy now or at this time. It's kind of like, I call it rebound. Like prices like rebounding, like bouncing off the floor, like making a rebound or something, like bouncing. That's common. 30 minutes flipping. We just flipped. Damn, 39.50. That held. Would you look at that? Pretty nice. Does it mean it's just gonna shoot up here? Like, I don't know. Does it mean it's just gonna fly up? It's hard to say right now. Is the daily flipping green at least? The daily's still kind of like green. Personally, I want to see the daily finish green and then look for pullbacks tomorrow. So personally, like with gold, I want the daily to finish a green candle, like close more bullish, and then the next day to start pulling back and look for pullbacks. That would be nice. Sweep the lows. That would suck if tomorrow swept this low. I did say that 1 hour could come down. Not a bad move. What's futures price at? Yeah, like 39.50. Like, I don't know if price is just gonna fly up from here. I don't think so. Like, if price towards market close like stays above here, then that's like a better sign. If like in the next couple of hours you don't break here and you just kind of maintain above it and start like trading to the right, maybe some consolidation here, then that could be like a better sign that it could fly, like push up and hold. I did say like this would be the bigger move. That might take some time. Powell is still speaking, isn't he? He is.
Shifting to lower cost products, but that at the top, people are spending at the higher income and wealth, and so much anecdotal data on that, and so we think there's something there. So,
Edward.
Thank you, Edward Lawrence with Fox Business. So, Mr. Chairman, I want to take another crack at the further reduction of rates is not a foregone conclusion. So in December, he said,
Yeah, the
far
gold
from
can't.
it. So
Gold's flipping
if a
right
cut
back
might
up.
not be on the table.
We came down
for
to an area of
December
demand.
because of lack of data. What is the
I
other
mean, if it
concerns
closes
that it stems
above,
from? So if it's not
closes
lack of
above
data,
39.50,
as the
that's
reason
like
December
better
is not a foregone
for the
conclusion.
market.
What other things could be the
Falls into
concern?
what we've been looking
well,
at.
perspectives on people on the committee.
I did put this chart.
that,
I did say it could probably come down to 39.70, 39.50 area.
and that we're down into
It's bounced up a bit. You could see, like I said, like closer to the hour when Powell was kind of like done finishing. Not done finishing, but like after like his first like 10, 15 minutes, little rebound on price.
But I think there are people on the committee who have higher estimates of the neutral rate, and that's you can argue these positions since
Back down to 39.50 now.
the neutral rate. So, I think
Like bounces, rebounds like that are
part of the committee,
common. Like
it's time to
see
maybe
quick
take a step
moves.
back and
Probably not gonna structure its move until tonight or tomorrow. Like the bigger move if this holds.
the stronger growth that we're seeing is
Like
real.
39.50 is not just gonna go up in a straight line. It's gonna take some hours for it to stay above it, close above it, maybe show rejection at it.
In this case, that gives a more downbeat read. So people just have, again, we've cut 50 more basis
Might come right
points
back to it from the looks of it.
meetings, and there's a sense like
These swings on gold.
from some, let's pause here, kind of thing. And
No, I don't see anything else to really look at. Like 39.50. Like if this was just like a regular day, but obviously it's not a regular day. Everything else is crashing too. Like everything's crashing right now.
So what's more
Euro just
in this division?
dumped.
Is it inflation risks? Is it
Like
improvement
everything's
risks?
crashing at the moment.
Deeper philosophy division among the board.
look, everybody on the committee is deeply committed to doing the right thing to achieve our goals, maximum employment and stable prices. You have differences on how to do that, and as I mentioned, some of that is different forecasts, but a lot of it is
USD
also,
CAD looks like trending up, starting to like a buy.
The different variables, which is common through, through all Federal Reserves.
I'll have to keep an eye on
people
that.
Just have different risk tolerances, let's say. So that leads you to people with disparate views. You will know that from the speeches you've been listening to.
UCAD maybe swings. USD CAD doesn't look bad.
So we're
Like
at a
this
place
area
now where we
daily.
In fact, cut 2 more times, and we're 150 basis points closer to neutral, wherever that may be, than we were a year ago. And so there's a growing chorus now of feeling like maybe
Damn,
this is
there's a
where
nice
we should
setup
be
right here.
something-
Wow.
Something like that. That's what it is. It's just what you think it would be. It's and again, you've seen it in the September summer of economic projections. You've seen this in the
USD CAD has a nice chart lining up on the daily here.
And now I'm telling you that's what you can expect.
Like a break and retest.
And I'm just telling you.
Trending up, bullish structure. Gold looks like it's gonna come back to 39.50.
Thank you so much. Lizette Scholzley with ABC News.
Yeah, gold looks like it's coming back down 39.50 area.
The market is weakening right now, and what will this rate cut do to improve the job market?
It's literally moving hundreds of pips. Like gold, the way it's moving is crazy. It just moved like 300 pips down.
One of them is just a dramatic reduction in the supply of new workers.
You might see some bounces around this area just because like the time it is, the hourly just finished. You might get some bounces around 39.50, but
which is a cyclical thing. And then there's
that's about it. Like that's all I really see. Like there was a trading opportunity there already. USD CAD looks pretty good
has been accelerated.
on daily.
So a big part of the whole story is that
If this thing can go up and then pull back, it's like nice. UCAD
you know, so the unemployment rate is going down, meaning that
daily looks clean.
is going down a little more than supply. So that's
USD CAD looks pretty clean.
but it is mostly a supply function. It's mostly a function of
Gold maybe coming back to test 39.50 area.
many people.
From the looks of it, looks like we're gonna test 39.50, maybe 39.55, 39.50 area. If that area doesn't hold, then like you have to wait till like nighttime session or tomorrow morning for like another setup.
Job creation. If
Yeah,
you
Powell's been speaking for a little bit now.
likely overcounting in the
Powell said lack of data
is pretty close
due to government shutdown will affect the December rate cut decision. So he's not sure of rate cut decision for December.
jobs. If it's in equilibrium, if it's in balance.
He said Trump's tariffs are causing overall higher inflation.
So, I thought, and many of my colleagues thought, in fact, you've seen the last two meetings, that it was appropriate for us to react by supporting demand with our rates, and we've done that. We've reduced so that rates are looser.
Might come back to like test the 39.50 on gold around that area. It's wicking.
and that should help, so that at least the labor market doesn't get
It's wicking,
worse.
trying to like wick to
It's
it.
a complicated situation, and some people argue that
Maybe the low holds. How many times have I said that on a stream? See if this low can hold.
others argue, as I
If
do,
this low
that there
holds
is an effect from demand and that
on
we
gold,
should use our tools to support
maybe the low can hold.
when we see this happen.
You also talked about tariffs causing a one-time price increase. Should American household consumers expect that inflation
See if the low holds. If not,
this year because of those
I'll be back on to find another setup.
The basic
I'll be scanning the market. Don't worry.
there will be some additional increase
New
in
video?
inflation because it takes a while for tariffs
Got old man Powell speaking still. Fun times listening to him.
and finally get to consumers. And we see
Next time he speaks, just short the market before he speaks. Like
we see those
short when he speaks.
if you put tariffs in effect, and they've been coming into effect consistently in
Next time, just short.
May.
I just dropped a new YouTube video. You guys gotta check it out. Check it out. Check it out. Just dropped a new YouTube video 6 minutes ago.
Increases though. These
Check
are
it out.
10th or so on inflation.
It's a live little gold trading recap on how I made like about $8,000 on gold that day
I think some projections
on 2 different setups. That's actually a very educational video, value video. There's a good 13-minute good value in this video.
as all of the tariffs are
I show the profit. I show the trades. Go check it out.
you've had a
Yeah, gold got a wicking around that 50. It's flirting with it.
how we believe and hope that
Hold or fold situation.
once the last
Set and forget.
is put on something,
Set it, forget it maybe, if you can.
it becomes
It's moving hundreds of pips right now.
but it stops going up, if you will. Prices
We got our
stop going up.
we got our mini counter trend line breakout too. We just got our counter trend breakout here.
Inflation, as I mentioned, non-tariff inflation is not so volatile.
Trusty counter trend line breakout here.
Consumers are not interested in that story. Their prices are higher. More than that, the reason they're so unhappy about inflation.
Jerome, yo, gold's pullback though on the hourly is pretty steady. It's not like it just obviously had the dump, but it's been pretty steady to this dump.
Feeling those higher prices.
We're in the 3900s below 4K.
2 or 3 years ago, they are, and that's, I think, a large part of why.
Still holding the zone.
People, inflation is still very much making people quite unhappy.
Check out the new YouTube video, yo.
And it's nice that
Fire video, live gold. Live gold day trading recap, made $8,000 profit. It was on 2 trades, 2 different trade setups. Go check it out. It's a fire video. Solid video. Yo, gold is just still holding the area, folks. What more to say? Maybe some bounces from here. Maybe we get that higher extension up. Just depends on how price holds. Powell's still speaking. Fun. So much fun. This guy's got his asset valuations high. This guy says bingo
price
check.
and
This
say,
guy
"Hey,
knows.
that's wrong." It's not our job to
fundamentals.
do that. We look at the overall financial system, and we ask whether it's stable, whether it could withstand shocks. Right. So, banks are well capitalized, while some households are clearly under stress. In the aggregate, households are in good shape financially, relatively manageable levels of debt. At the lower income spectrum, you are seeing rising defaults, particularly around subprime auto.
Someone
but
said I'm
nonetheless,
related
in
to
the
Jerome
aggregate,
Powell.
pretty good. You don't see too much leverage in the banking system or the financial system. It's a mixed picture, but it's not an overly troubling picture. And again, I'm not. It's not appropriate. We don't set asset prices. Markets do that.
Well, you must be well aware that by lowering interest rates, you're contributing to additional asset price increases. And I wonder how you balance the idea that lowering rates would help the labor market with the reality that it seems more likely to be stimulating increased investment in AI, which is the rationale for thousands of job cuts that have been announced in the last few weeks.
Yeah, I don't think interest rates are an important part.
There's
of the
been a
AI
lot of job cuts. Amazon laid off 14,000 people, I think, like yesterday for AI. Not because they're doing bad, but I think it was like 14,000 people got laid off the other day from Amazon. And they're being replaced by AI because AI.
About 25 basis points here.
I saw that.
We use our tools to support the labor market and to create price stability. That's what we do. That's our two jobs, right? So we're here to, by lowering rates at the margin, that will support demand, and that will support more hiring.
Buy gold,
and that's
buy
why we do
beef,
it.
buy chicken.
Now, no 25 basis point or even
Fucking
50
long
basis
gold.
point
Someone
hike is
said
gonna
long
be a
gold,
dispositive
long
thing,
beef,
but
long
ultimately, lower rates will support
Long at all.
more demand, and that'll support hiring over time. And of course, we also have to be careful about this, which is what we've been doing, because
gold hold
we
this
know where inflation is, and we know that, I've told you
maybe
the
a
story.
bounce.
It's a complicated story, but this is the best assessment that we can make. Because there's uncertainty around inflation and the path ahead for inflation, that's why the pace we're going has been a careful one.
Victoria.
Coupon linked below.
Hi, Victoria Guida from
Coupon
Politico.
code
On
expiring
AI,
soon.
I'm just wondering.
Gold looking like it's liking what Powell's saying right now.
We've been seeing is fed by investments
Like it's
in
now
AI.
gold's looking like it's like flirting with what he's saying now. It's kind of like,
Sudden contraction in tech investment would
ooh,
mean for
I
the
think
overall
it's kind of
economy.
trying
Is
to
there
bounce up
strength
more.
in other
Looking down.
sectors? And,
Looking more
specifically,
bullish,
are there any
basically what I'm
lessons that you
saying.
took from the 1990s in how you might approach what's happening right now?
Yeah, this is different in the sense that the companies that are so highly valued actually have earnings and stuff like that. So if you go back to the 90s and the .com, these were ideas rather than companies, and
We need,
so there's a clear
crypto's
bubble there, whereas
rebounding.
I won't go into particular names, but they actually have earnings, and it
Bitcoin
looks like
chart
business models
doesn't look too bad,
and
like a head and
profits
shoulders
that kind of thing.
pattern.
So it's
Like
really
an
a different
inverse
thing.
head and shoulders.
The investment we're getting in equipment and all those things that go into creating data
Yeah,
centers and
gold's
feeding
kinda liking what
it's clearly
old
one
man's
of the big
saying
sources of
right
growth
now.
in the economy. Consumer spending also, though, has been is much bigger than that.
Grandpa.
And has been growing and has defied a lot of negative forecasts, continuing to do so this year. Consumers are still spending. Now it may
Kind of liking what he's saying.
higher-end
It's moving
consumers,
up, playing ping
maybe
pong,
skewed
but
that way. But the consumer is spending, and that's a big
hourly
portion
doesn't look
of
too
what's
bad.
going on in the economy, substantially bigger.
like how
than
it's forming.
AI. You
Maybe
could
it
point to
sticks for the
to
afternoon and
growth
has a
actual,
recovery or a bounce back.
Maybe growth as opposed to
That's what I
level,
see.
but, consumer spending is a much bigger part of the economy.
Yo, Jerome Powell can go
Why do you
off.
think that the labor market is slowing so much, even though consumer spending is strong?
Yeah, how?
So much?
That's a
Well,
big
what's
question.
happened is that the supply of
Ever
workers
scalping?
has
Like,
dropped
fuck.
very, very sharply due to mainly immigration, but also lower labor.
If you have that
costs.
scalping energy right now,
So,
it's like,
and that means there's less need for new jobs because there isn't this flow into the
it's like liking what he's saying. It's pushing up, like it's closing, like
because there aren't those people. now,
looking
so
a
there's
little bit
not
more bullish,
a
like the
supply of
candle's
workers
reacting.
showing up
A lot
for
of ping
jobs.
pong going
In
on.
addition, demand has also gone down, and so has labor force participation has declined, which is more of a sign in this case, of
What time is the meeting tonight? 10 p.m. That's a good
so
time to
I think
stream.
you're
Yeah.
seeing some softening.
I like streaming at that
Yeah,
time.
the
10
economy's
p.m.,
growing
11
at a
p.m.,
slower
even
rate.
midnight. I like streaming
About
later
4%
hours.
last year. We
10
grew
p.m.
about
That's a good
1.6%
time. I'll be on
last
10
year.
p.m. to
It could've
watch
been
the
a couple
yeah,
of
well,
tenths higher
to see
if
like
not
what the
for
market does
shutdown.
during that meeting.
And of course that will
The
reverse.
meeting's tonight,
But,
10 p.m.
you know,
President
you still got the economy growing
Trump,
at a moderate pace.
President of China.
Andrew.
I like streaming late Tokyo, pre-London, and then also like
Andrew Hackett
early
with
New
the-
York. Those are good
with the
times.
Washington Post. I wanted to ask if you could elaborate on how you think about policy.
I like streaming when it's dark
in the context
here.
of the data drought. Does it make you inclined to stick with your plans as set out in September in the absence of the data that might change your mind, or does it make you inclined?
Yeah, it
to
looks like we're getting that
caution
bounce. Like it's the
because
same thing
of
that happened
uncertainty?
last time. It dumped and then it bounced after.
Well,
Literally,
we'll know
like I
when we
said, it
face that
could
question,
bounce
if we
even at
face
the
that
hour
question.
before.
You know, it'll probably be argued both ways, right? But I've said a couple times here that, you know, if you really aren't getting information, you really don't.
I'm gonna
know,
set up. I'm gonna wrap it
and
up,
the
but I'm gonna
economy
set up a
looks like
stream
it's
for
solid
tonight.
and stable and hasn't
When I
really
wrap it up.
changed, you know, there will be an argument
Around
that
the
developers
Trump
where it's
and
because
President
there
of
will be an
China
argument
meeting
that,
tonight.
You know, you slow down in a when
Nothing
you
really
can't see
changed
the-
much so far on the hourly here. We were looking at this
Others
on
may
gold.
argue
Maybe it still
even-
sticks. Maybe it still
I'm not
holds.
sure where this argument will come, but you're perfectly right that you could also argue,
Had some
well,
quick bounces,
things
quick
haven't really
rebounds, as I
changed,
like to
but
call
you
them.
might not know that, you know,
Maybe
so
those stick.
I don't know whether we'll face this or not. I hope we don't. I hope by the time of the December meeting, we're getting, you know, a better flow of data. But if
Hope
we,
by the
we're gonna
time
have
we
to
get
do our
to
jobs one
December
way or the
meeting,
other.
we're getting a better
I
flow
also
of
just
data.
wanted to
I
ask
would
a
say.
generic question. I think several years ago you said the overall amount of capital in the system was about right. As the Fed moves forward with a revised Basel proposal, potentially changes to the GSIB surcharge, has that changed at all?
Still
And
holding,
are
like,
you planning
any
to
wicks back, like,
significantly reduce the amount of capital
Any
in the system?
pushes back to like
Thanks.
39.50, 39.50s even could be potential entries if this is going to hold like on the hourly. Any wicks back, any quick moves back, quick little drops back could potentially be entries if this is going to hold.
2020 was about right. And of course, there's been much capital added since then through various mechanisms. But, you know, I look forward to I know those discussions are really just getting going. They haven't come to the point where they're, you know, where they're got a whole plan and that kind of thing. So I really don't have much to say on that.
Hi, Chairman Powell. Brian.
We'll be on tonight though, guys. Gold still holding 39.50. It held the 39.50. There seems to be some buyers there, bullish dominance there. It could try to wick back.
So we do not.
You see how it came down to like 39.55 there, 39.54. It could try to come back
I would say, then again, we don't
and
have,
make
we didn't
similar
get
movements like we've seen literally over the last like 30 minutes,
payroll
40 minutes.
report, but we do get, we look at, you know, the unemployment insurance claims, initial claims are reported at the state
Stuttered
level,
there.
and we still get those, and we can accumulate them and get the national number, and there's really, I mean, no story.
Replace these reporters with AI.
Same thing with the job openings we get from.
Yeah,
Indeed.
Amazon, I saw.
just
There's
no
been a
story
lot of
for
job
the last
cuts.
4 weeks.
AI is
It's
replacing a lot of
stable. So you
jobs.
don't see anything that says that the job market is, or really any part of the economy is.
14,000 people got laid off because of AI
deterioration. Don't see
yesterday by Amazon.
You see more things like I mentioned though, which is that, you know, you see big companies making announcements
Steep.
of either of layoffs or
Be-
of.
What does that mean?
the idea
I don't even know what that means, to be honest.
They won't need to.
Beverage.
And their number of employees is not.
Yeah, price is just playing ping pong. It might try to do quick wicks down to find some scalping entries around the 50s, 39.50, 39.50s area. That's all really for now.
You don't see it in the aggregate.
Come back tonight or tomorrow morning. We'll be back on tonight and tomorrow morning to see where the markets are doing and where things are at. Make sure you guys check out the new YouTube video. Just posted it like 6 minutes ago. Well, a little bit more now. Go check out the new YouTube video just posted. But yeah, to come back on tonight or tomorrow morning, and we'll see